I mean, everything that we do is through the lens of risk. And, we get this question a lot around how do you define risk? Because our strategy, because we're so concentrated, it often appears to people as if, well, this is quote unquote risky because you have a concentrated portfolio and that increases the amount of month to month volatility, even quarter to quarter over year. But we view ourselves much like, in the sort of Warren Buffett philosophy of we're business owners. And the reason why customer value proposition is especially important in this market, sort of I think in this like paradigm, is the internet has been this incredible force for transparency, and ultimately customers know who has the best product or service, and that's true across business to business and certainly consumer businesses. And so where you find yourself getting into risky situations is if you own companies that are not meeting customer value proposition. And from there, growth sort of diminishes, growth rates slow. So we're much more sort of focused on companies that have the ability to just create very happy and loyal customers. So that during times of inevitable market chaos, the inevitable next recession, the inevitable force majeure that we've now encountered, it seems like we encounter these tail risk events every 6 months now. And so I think that in an environment that is so prone to big swings in market volatility and chaos, owning businesses that have exceptional customer value proposition built into their sort of management DNA is itself risk management. And that gives us the ability to a allocate capital with a lot of confidence, with a high degree of conviction, and then b we don't trade very much. We let companies that we own grow. And it also gives us really a significant margin of safety when we own companies with a great value proposition. And this also has sort of secondary and tertiary effects of when companies have incredible value propositions, and tactically that just means everything from like, high NPS scores, low churn rates. I mean, you can quantify it in lots of ways, but ultimately there's sort of a fulfilling prophecy of attracting new talent, retaining management to work on these problems, and having loyal customers, because we see it in our business, is just so integral to kind of long-term success. And if you're trying to build a firm and a track record and investment strategy that can survive 10, 15, 30, 50 years, these are sort of the precepts or the ideas that we find most important for a long-term mindset. Inevitably there's going to be bumps along the way, but having just that conviction in the value proposition and knowing that our companies are focusing on that relentlessly and not, financial engineering to meet their quarterly goals, that's a big benefit for us as long-term holders.